Joining us for more on the market strategy right now, Sonders, Chief Investment Strategist at Charles Schwab, and Rupal Bhansali, CIO and Portfolio Manager of International and Global Equities at Ariel Investments. Ladies, thank you for joining us. Lizanne, just a question on what we just heard from President Biden and the slew of executive orders we're seeing as it relates to fighting COVID-19. How are investors viewing this? It doesn't seem like the market, investors, have been too worried about the short-term impact that we're seeing on the economy and on lives of this COVID surge.
Well, I think the executive orders were largely expected, but I think there's a more subtle shift that actually has been driven to some degree by the weakness that we've seen in economic data, particularly retail sales, the most recent jobs report, and that may help to explain this rotational move back into the pandemic winners, the stay-at-home stocks, whatever terminology you want to use. And I think that may be somewhat reflective of this dip in economic activity, of course, driven by the virus. So that's just the latest phase of what have been a series of rotations since early September.
Rupal, you're not so much focused on what the most likely next rotation move is based on recent months or even the last year or so, but much more what's likely to rotate based on the last decade. Is that right?
Absolutely. I'm a long-term investor. And when people are caught up in trying to win the battle, you should actually focus on winning the war, which is how do you position your portfolio for the next decade? Because I don't think it's going to look anything like the previous decade. So it's time to reposition.
And what does that look like exactly?
And how do you... Yeah. Exactly.
Well, I think there's a regime change that's actually underway. And if you don't pay attention to it, you kind of can miss the boat. And that regime change is that the days of making double-digit returns by just going long beta, through passive indices was frankly the way to win in the last decade. But I think valuations are so rich around the world that beta is actually not going to generate returns. It's going to have to come from alpha. So it's really stock picking, which is a source of alpha. But I actually think it's another asset class which unconventionally people don't think about as potential for making money, and that's the currency markets. I know all the attention is on equities and fixed income, but I think that the US dollar is likely to weaken significantly over the next decade, having strengthened over the last decade. That's another form of a regime change. And I think international equity investing will give you two sources of return. Not only are the stocks cheaper there, so there's more scope for capital appreciation, but you can also have currency appreciation. So more bang for your buck abroad.
Shepard Smith here. Thanks for watching CNBC on YouTube.